Good morning, everyone. Well, the dollar is opening mixed again in Europe Thursday. It's higher against the Australian and New Zealand dollars, more or less unchanged against sterling, Sweden, the Swissy, and the yen, and lower against the euro, the Norwegian krone, and the Canadian dollar. There was a sharp move up in euro-dollar in early U.S. trading yesterday after Market News International ran a story saying that the ECB wouldn't make any moves today. A neutral outcome from the meeting seems to be in the market by now. It looks to me like the market's already completed the buy the rumors, sell the facts cycle ahead of this meeting, first buying the dollar in anticipation of ECB easing and then selling it again on reconsidering the matter. If anything, I'd expect to see euro-dollar fall somewhat if ECB President Draghi comes out with the kind of dovish comments that he's made at recent meetings. Tune in again next month when they revise their economic forecast. Another point, the two Fed papers that I mentioned yesterday continue to be a focus among investors in the U.S. Expectations for Fed funds collapsed yesterday as investors are now discounting the Fed remaining lower for longer. The question is whether ending the Fed's monthly bond purchases but leaving interest rates lower for longer would be good or bad for the high beta risk currencies and emerging market currencies. My view is if they taper off quantitative easing despite weak economic data, then it won't be good for risky assets regardless of the level of short rates. And if they taper off quantitative easing because the data supports the move, well then nobody's going to believe the lower for longer scenario anyway, just like has happened in the UK. So the whole argument may just be a wash for the high beta currencies or even a negative if people think it will provide a justification for the Fed to end its bond purchases prematurely. Now, as for today's schedule, in addition to the ECB meeting, there's also a Bank of England meeting today. But given the bank's forward guidance, that's likely to be a non-event. Last month, when the bank issued its meager statement, cable didn't move at all, and I'd expect to see the same lack of response this month too. Then later in the day, we have the advanced estimate of U.S. third quarter GDP, which is expected to show an annualized rise of about 2%, which would be somewhat of a deceleration from 2.5% growth in the second quarter. That's due to cuts in federal government spending and sluggish spending on services, notably utilities. But I think given the third quarter doesn't include the government shutdown, I expect the figure would have less impact than usual, unless it was very different from expectations. The one standard deviation range of forecast is 1.7% to 2.3%. For more information, including technical analysis on the currencies, please read the full comment on IronFX.com. You can also like us on Facebook, follow us on Twitter, subscribe to our YouTube channel, or circle us on Google Plus to get more trading ideas. This is Marshall Gittler, head of Global FX Strategy at IronFX, wishing you solid trading.